Most traders don't lose because they're bad at clicking buttons. They lose because they were taught the wrong story about how markets work. You've been told markets move because indicators line up, because news hits, because patterns complete, because someone smarter is hunting stops. Some of that sounds logical. Very little of it explains what actually happens when price moves. Markets aren't mysterious. They're not emotional, and they're definitely not random. They're auctions. Continuous, two-sided auctions whose only job is to discover a price where business can get done. Every tick is a question. Is this price acceptable or not? This series exists to teach you how to see that process. Not after the fact, not through hindsight, but while it's happening. If you've ever felt early, or late, or right but still losing, it's probably because you were focused on direction instead of acceptance. And that's where everything starts to change. Over the next set of videos, we're going to strip trading down to its core. No signals, no predictions, no hype, just structure. You'll learn why price rotates when nothing is happening, why breakouts fail more often than they work, why some levels feel sticky and others get blown through like they never existed. You'll learn where risk actually lives and why it's not a number, why patience is a position, why timing matters more than setups, and why most traders interfere with their own best trades. But before we get into any of that, we have to address the biggest lie in trading. The lie is simple. If you know the direction, you'll make money. Almost every trading strategy is built around this idea. Bullish or bearish, up or down, buy or sell, traders spend years trying to predict direction. Stacking indicators, watching news, drawing lines, convinced that if they can just guess right more often, everything will finally click. It won't. Because markets don't move because they want to go up or down. They move because a price is either accepted or rejected. Direction is the result, not the cause. If direction was all that mattered, breakouts would always work. Trends would never fail. And most traders would be profitable. The opposite is true. Most breakouts fail. Most trends chop before they pay. And most traders lose money, even when they're right on direction. Not because they're bad traders, but because they're asking the wrong question. Instead of asking, is price going up or down, they should be asking, is the market accepting price here? The market isn't trying to trick you. It's not reacting to your indicators. It's not respecting your trend lines. The market is running an auction. Every price is a test. Will buyers do business here? Will sellers step in? Or will one side walk away? When both sides participate, price stalls. When one side refuses, price moves. That's it. From the outside, this looks chaotic. Sudden reversals, fake breakouts, violent moves with no news. But from an auction perspective, these moves are logical. Most of what traders call stop hunts, manipulation, or algo games are just failed auctions. Price explored. No one accepted it. So the auction snapped back. And the moment you stop trading direction and start trading acceptance, three things happen. You stop chasing moves. You stop fighting rotation. And you stop needing constant confirmation. You stop asking where price is going. And start asking whether the market has agreed on value yet. That's the foundation of Harmonia. Not prediction, not signals. Structure. If this feels uncomfortable, that's a good sign. Not because you were wrong, but because you've probably spent years trying to answer a question that never mattered. Direction isn't useless. It's just late. Before price can trend, before it can break out, before it can collapse, the market has to decide whether a price is acceptable. That decision process is the auction. And in the next video, we're going to forget charts entirely and look at markets for what they actually are. A continuous auction, where price is tested, accepted, or rejected. No indicators, no setups, no bias. Just the rules the market follows, whether you're trading it or not.